Hey everybody, this is Jose Blasco. We are about to get started. Little issue with launching the stream, so I'm a few seconds delayed. Sound check, please, so we can start immediately. I believe all is good for us to get started. But again, a quick message on the chat box, as always, would help. How are you, my friends? Would help very much to confirm that all is good. You hear me, and everybody is ready to get started. So please go ahead and do that. I believe all is good. In the meantime, I will be highlighting the disclaimer on the upper left side portion of the screen. Please read it carefully. This is important information. And as you read it, we'll be ready to get started. Mark, how are you? It's good to see you. Joe, how are you? Christian, good to see you as well. Everyone, this is great. Thank you for joining me on Sunday today, December 19. And the plan for today, as always, when we do the top sessions, we're going to be looking at the platform, keep learning features, characteristics, parameters, ways on how to use it, etc. And many times when we are learning the platform, you cannot separate the platform from trading, and we have kind of like mini lectures about certain concepts related to trading. And ideally, these sessions are indeed top sessions, and they help you very much. Talking about that, be ready to ask questions, and I'll provide you with answers anytime during the session. And more than happy to be there for you, my friends. Okay, so thank you so much. With all of this said, we're gonna get started. I want to show very quickly as well a page talking about questions that you wanna use when you have questions. tradewithufos.com/Jose or /Becky or / Reynaldo or any of your instructors. I see, Joe, you are mentioning that your screen is blank. On my end, everything looks good. I am actually streaming and looking at the stream myself, and everything looks good. Everyone, could you please confirm, Christian, Mark, that you see the screen, or do you also have a blank screen? Because I believe all should be good. Again, getting confirmation would be great. So again, as I was saying, when you come to the page, tradewithufo.com/Jose, so you get access to this questions and answers section where you just need to log in, click on the green button to ask a question. So Christian sees me fine. You restarted, Joe, very good. So all should be good. And again, there are many questions in here. Actually, Joe, one of your questions is right here on the top. Nice coincidence. And then, so again, you guys can pause your questions, you get the answers, but also you can search for questions here because other members of the community may have asked the same questions that you have, and maybe the answer is already there waiting for you. Okay, so keep that in mind. I know some of you are using this very nicely already, so great. But for the ones of you who are new to the sessions, just know that this is there, and it's indeed very useful, isn't it? Cool. Okay, so let's begin with our session, and let's continue what we were doing. Miguel, it's good to see you, my friend. Nice to see that you can see us as well. Thanks for that. I missed your message a moment ago. It's good to see you, Miguel. Yeah, and you saw the response, Joe. Wonderful, perfect, great. Okay, so let's continue. And what we're doing, right? It's what we have been doing in the past sessions was to look at the studies. We've been learning about the studies on the top portion of the study menu, which are all the studies that are being plotted as an overlay. For example, Elliott wave, which is an overlay on top of the chart, or the UFOs, right, which are also on the chart. Now, all the studies that are located in the bottom portion of this menu, they are studies that are plotted in the form of subgraph, such as AutoClimate. So this is what we're going to start discovering. This is going to take us probably a few sessions. Okay, we're going to start today with AutoClimate, and we're going to be going one at a time. Again, talking about how to use it within the platform, but also how to use it, the concept behind all those tools, how to combine it with other techniques, how to look for opportunities with those. Again, it's going to be a little bit of a mix, hopefully a pretty interesting conversation for everyone. Okay, so to start fresh, I'm just going to open a new chart, as I normally do. Let me go ahead and remove all studies. Okay, so it's a blank chart. And what I'm going to do is right click, add study, and I'm going to start with the first one on the list, which is AutoClimate. I'm just going to click on AutoClimate. At this moment in time, I'm just going to click OK and accept everything. I'll come back to this menu in a moment. And here is AutoClimate being plotted in the bottom part of the screen. So it's not a mystery. It's quite simple in the end, even though there are settings and parameters, which I'm going to discuss in a moment. But before we get there, let's zoom in a little bit so we get a better view of AutoClimate. And as we get a better view of AutoClimate, let's discuss what AutoClimate is doing, the meanings of the various colors, indication, values, and statistics that are being presented by AutoClimate in top. And basically, let's talk about how to use it. Okay, let's talk about that first, and then we'll get into the parameters. So, AutoClimate is a tool designed to answer what we call question one, which is it time to be a buyer, or is it time to be a seller, or maybe it's not even time to trade? Okay, that's the first question that you should ask yourself as a trader before you even plan on a trade. Okay, because maybe it's not time to trade, so then everything you do is going to lead to problems because it's not time to trade. Market may be way too volatile or way too not volatile, or maybe there is not a clear directional component in place, and basically you are having a bet which is low probability when it comes to trading in a specific direction. So AutoClimate is looking at the climate. The concept is kind of like, is it time to trade, yes or no? If yes, long or short. If no, just find another stock. And again, coming back to the name of the study, the name of the app, AutoClimate. So the idea is, you're home. Is it sunny? Is it rainy? If it's sunny, go for a walk. If it's rainy, stay home. That kind of approach. Okay, very, very simple approach. And the basic way to understand this indicator is the two color, blue and red, where blue tells you time to be a buyer and red tells you time to be a seller. Okay, I guess it's quite self-explanatory, even though there is much more than this. Okay, now let's understand every one of those very relevant details. But before, I want to make sure that all of you understand that when using AutoClimate, the only place where you want to look on the chart at this moment in time is the last dot on the right. Everything that happens here on the left, it was very relevant in the past, but is not relevant today as you're getting ready to trade. And when I say today, I'm saying today because right now I'm looking at the S&P ETF on a daily time frame, but it doesn't matter. It could be a 5-minute time frame of Microsoft, right? And again, even though it's not a daily candle, it's 5 minutes per candle. So that dot on the very, very right is the dot we care about. Everyone else of those dots are interesting to observe if you want to know what happened in the past, but we don't trade in the past, we trade in the present into the future. So that's why we're going to focus on the dot on the very, very right. Now, first thing, now that we know which dot is the one we need to check, the first thing is to understand, the meaning of 4 possible cases. 4 possible cases, which are blue or red, that's 2, but there are 2 more, which is the dot may be thick as well as the dot may be thin. So we are talking about blue or red, and we are talking about thick dots or thin dots. And it could be thick and blue, thick and red, thin and blue, thin and red. So you got 4 cases, which if you look at the current case right now, it's thick and blue. That one would be the prior one, which again, we don't care about the moment when we trade, we don't care, but I'm just going to point at it just for this explanation so you understand the different cases. So that would be a case of thick and red. If we look at this one here would be a case of thin and red. And if we look at this guy here, for example, that would be a case of thin and blue. And this, depending on the resolution of your monitors and the size of your screen and so on, so you may see it much better if you make it larger, or maybe you prefer to keep it smaller so you see better the difference between thin and thick. Again, all of this is personal preference, but you can just play with a zoom in, zoom out, zoom in and zoom out buttons to adjust this to your liking. Okay. Again, 4 cases: blue and thick, red and thick, blue and thin, red and thin. What's the meaning of thin? No matter if it's blue or red. So thin means that the climate is unconfirmed. Unconfirmed means that while there is a directional component which leads to the color blue or the color red, that directional component is not strong enough to be utilized, in the sense that we don't have a statistical advantage trading in that direction. Okay. For example, if we go back in time, somewhere in here, for example, right here. Okay. At this moment in time, the dot is thin. Okay. So if this was the present, there is a directional component. That's why it's blue, and you can see that there is some movement to the upside, but it's not a clear indication of price movement, such as, for example, cases like, for example, here, okay, where the market is moving in a way that is way stronger. Again, I will explain a bit better what AutoClimate does in a minute, and you will understand what that means. But basically, when the dot is thin, even though there may be a color, because there will be a color always, blue or red, that the fact that it's thin means that that directional component is not strong enough to bet on it, if you wish. I mean, you could, but you don't have a statistical element in your favor, and therefore it's a little bit of a low probability gamble. Okay, so when the dot is thick, then that's a different story. That it means that not only there is a directional component, but the way price is moving suggests that that movement is going to continue in that particular direction. Okay, so maybe it's a good idea now to have a little bit of a pause here and explain what does it mean to have just a little bit of a directional component, but you don't expect that to continue, versus you do expect it to continue. Okay. Question here from Christian. But isn't the historic record your backtest, Christian? Are you referring to the count values and all of that? Is that what you're referring to? Because if you are referring to that, I'm going to get into this in just a minute. Right now, I'm just getting into explaining the meaning of each dot. Okay, and that's and knowing that the one that matters is the last one, because we trade in the present. Okay, so now so let's talk about this, right? So why is it that sometimes the dots are thin, and why is it that sometimes the dots are thick? Okay, well, this has to do with the behavior of price. If you think about technical analysis in a classical form, when we are dealing with a trending market, a trending condition, and a trending market, if you think about it from a classical definition, you would probably it would probably come to your mind, the classical Wall Street sayings, such as the trend is your friend, things like that, meaning that if you keep trading in the direction of the trend, the trend, will continue evolving, or is likely going to continue evolving, and therefore, is your friend. You are trading in the right direction. You are not in the wrong side of the market, trying to fight the trend, expecting the trend to reverse just because. Okay, so again, the fact that the trend is your friend, I guess it's a fact. Okay, especially because it becomes a self-fulfilling prophecy. Apart from, markets are made of actions from people. We all behave based on psychological patterns, which end up, in the case of trading, becoming trends. But at the same time, if many computers are programmed to be trend following systems and things like that, so now it becomes a self-fulfilling prophecy, and therefore, we've seen, like 2008, the market crashing and going crazy down way more than, maybe would have been logical, but just because there's so much computer trading just shorting the market. Same thing when the market started rallying in 2009, or many other cases, during the pandemic, in 2020, for example, cases of the similar nature. And even if you look at intraday markets, so indeed, sometimes we see the markets pick direction, and that keeps going and going and going. And sometimes, actually, we would even be tempted to say, that's crazy. It's just going for way too long. It went way too high, or it went way too low, and it keeps going. And it's going to be like, why is that, right? Well, it has a lot to do with human behavior, computer trading, And again, the trend is your friend. Okay, so that's a fact. But we need to talk about two more things about the trend, which is the trend is your friend until it bends until the bend at the end, right? So when is that going to happen? We need to talk about that. And then the other thing that we need to talk about is, which is when the dots become thick. So what is the type of price behavior that classifies or qualifies as a valid, healthy trend versus some little bit of a movement in a specific direction, but that may not be healthy enough to expect it to continue. Okay. Well, again, going back to classical technical analysis, as I was saying a few minutes ago, the definition of trend, I mean, there are many, but one powerful definition of trend is when technical analysts talk about impulses followed by corrections that then impulse again and keep going. And this is very much in line as well with Elliott wave theory, where you got waves, and certain waves are impulsing waves, other waves are corrective waves, etc., etc. So again, when a market picks up direction in a way where you can clearly see impulses followed by corrections, then you can actually tell that you are in a trending environment, where if the market is just going up and down and is impulsing in both directions, right? So that means that it's more of a sideways market more than a trending market. And if the market was to just move up a bit and move down a bit without a clear impulse either, so then it would probably also be some sort of a very boring, very non-volatile sideways market, which, again, relying on that, it's again, you don't even know which direction to bet in, isn't it? So the idea behind AutoClimate, and that's the reason for the thick and the thin dots, is that from behind the scenes, AutoClimate is not only looking at the directional movement, in which direction price moves, but also how is price moving. And when there are signs of impulses in a specific direction followed by corrections, then you would get a thick dot in that direction, because again, now you have more of a confirmation that not only you have a directional component, but you actually have an impulsive, healthy move, which is likely going to be followed by potential corrections and other impulses in that same direction. And therefore, now the trend is potentially your friend, instead of, you just got a couple of candles or something like that, and it doesn't say anything, really. Okay, like for example, you can see here, it's going up, but the majority of those dots are thin because the way it's going up, okay, it's not significant enough. It's not producing any sort of an impulse to tell you the trend is reversing. Okay, later in that climate, there is a little bit more strength coming in. Okay, but again, probably you would not have traded here. Okay, if you had traded long, it would have moved against you, but probably you would not have traded because of the count, which I'm about to discuss in a moment, which is the second part of the equation, which I mentioned a few minutes ago as well, which is the trend is your friend until the bend at the end. And the question is, okay, so when is the trend going to stop and reverse, right? When is the bend going to happen, right? And that's when the count, as well as the max distance, come into place in order to try to assist us to understand not only if that's impulsive or not, if the climate is confirmed or not, but if the climate is likely going to continue or the climate is likely going to change. Okay, cool. So let me take a look at questions. Christian, let's say the dots have mixed predictive record looking back. Shouldn't you be cautious with taking the signal for this market? Would you mind, Christian, to explain that a bit better, because I'm not sure I follow what you mean. In this case, my application of AutoClimate is I'm just looking at the last dot on the right, and if it's thick and colored, in this case blue, so then I'm ready to go long. If it's thick and colored red, I'm ready to go short. If it's thin, then the climate is not confirmed, so then I just don't want to trade. Okay, so that's the beginning part of the thinking process behind using AutoClimate. So I'm not looking at any of those candles, no need. And the reason why I'm not is because now I'm going to be looking at the count and the max distance. And when looking at that, those are statistical measurements that are made of the prior dots. And therefore, whatever the prior dots are telling me, I'm going to be able to understand and extrapolate from those values. Okay. Now, of course, I guess, could you go back in time and look at the dots visually and extrapolate or get any sort of a conclusion of, the market more likely going to go up or down or change or something? I guess you could, but this is not how AutoClimate has been designed. Or the idea was to simplify the analysis instead of looking at it like if it was like a classical oscillator, looking back in time, looking at divergences and things like that. It's not how it's been designed. Okay, and again, nothing wrong with looking back in time, but at the same time, it's been designed for simplicity more than for over analysis. Okay, so I will say that. So so please, everyone, if you could give me a little bit of a confirmation at this stage with a quick message on the chat box where you tell me you're with me up to here on how to read AutoClimate. Of course, how to insert on top, it was super easy, but also if you have any question on how to put it on the platform, let me know. And if you don't, please, a quick okay is appreciated, so I know you are following, guys. So please give me that okay. And while you're doing that, I'm going to start explaining the count and the max distance. Okay, so what is the count? Okay, what is the count? And what is the max distance? Okay, and notice that in both cases, you have a statistical value in blue color and a statistical value in red color, right? And here is the same. You have a statistical value in blue color, and then you have a statistical value in red color. And then you have the current value, and then you have the current value. So whatever those things are, which I'm about to explain, you read them the same way. So the first thing that you would do is that you will know the type of climate in which you are, which is thick and blue, is an up climate. In case you got distracted, current is blue, current is blue. The current will always be aligned with the last candle, the last dot. So it's all blue in this case. In other cases, let me see if I can find, I don't know, let me see if I look at 60 minutes, for example. Yeah, so you see, well, actually, this one is not a very good example. Let me take a look at 120. Here we go. That one is a great example. So if I look at the 120-minute time frame of Microsoft, so the current climate is thick and red. So it's a down climate. So notice how current is red in both cases for count and max distance. If I go back to the 5-minute time frame, which was blue, so then current is blue and current is blue. Okay. Okay. So now we know what is there. So max distance, two statistical values followed by current, count, two statistical values followed by current. But what does that mean, and how are we going to use it? So let's begin with count. What the count is doing for us is counting the statistical duration of a climate in amount of candles. That's why it's called a count. You are counting candles. How many candles at an up climate tends to last in Microsoft on a 5-minute time frame? How many candles a down climate tend to last in the case of Microsoft in a 5-minute time frame? When I said tend to last, I mean statistically speaking. And this is when now what the tool is doing, okay, for example, that value of 8, okay, the statistical duration of a down climate in one standard deviation of the cases, which is 68-point-something% of the cases. So in a one standard deviation of the cases, the duration of a down climate is 8 candles. And the reason why that's the case is because, so we have climates of this duration. So 1, 2, 3, 4, 5, 6, 7, 8. We got climates which are longer than that. We got climates which are shorter than that, 3 candles. We got climates which are 1 candle. We got climates which are crazy long. Okay, so when you look at all of these back in time and you process that data and you extract statistical values, in this case a 1 standard deviation, so you would now know that something reasonable to expect if Microsoft was to start a down climate on the 5-minute time frame is to expect for that climate to last for 40 minutes. Why 40 minutes? Why 40? Because it's 8 times 5 minutes. So then you would expect the climate to fall 8 candles and therefore, plan on a 40-minute trade. Now, expecting the climate to last longer it's not a very good idea because it could indeed last more than 8 candles. Remember, 8 candles, one standard deviation of the cases. So there are other cases beyond one standard deviation, but it's not so likely any longer. Why? Because one standard deviation is 68.4% of the cases, right? So again, if you were to start shorting and you are shorting, for example, at this moment in time, right? So you are here, right? And Microsoft has been falling already for such a long time. You are now in candle 24, where statistics suggest 8 is the statistical duration of these climates on that time frame, and you want to short now. Well, I would say good luck, because you need luck. Could that last longer and keep falling longer without a change of climate? Yes. Is it likely? No. Why am I saying no? Well, because statistics suggest that one standard deviation of the cases is 8. Okay? And we are now trading at candle number 24, which means that climate is extremely overextended, and therefore there are more odds for that climate to reverse than to continue. Okay, so that's what that means. So again, in a perfect world, and again, we don't need to trade in perfect scenarios only, but in a perfect world, you will want to start trading in one specific direction when you got the first dot, when the count is 1. Why? Because if you catch this climate now, so you're gonna ride this climate potentially for the whole duration, which in the case of an up climate, blue color, the count for one standard deviation of the cases is 5. So you would expect that move to the upside on a 5-minute time frame on Microsoft to last for 25 minutes. So if you enter now, you may catch a 25-minute trade, 25-minute trade, because that candle already completed. So it's going to be 4 more, isn't it? So it's going to be 20-minute trade. And could it last more? Of course. Could it last less? Of course. What's reasonable to expect? 5 candles, 1 standard deviation. Okay, that's reasonable. Beyond that, it's a little bit expecting, what I would call being hopeful, meaning that now you expect this to keep going higher, where statistics are already telling you it's overextended. For example, here, okay, cases like that. So you've been running already up for 14 candles. Statistics suggested 5 is normal. So can you buy there and make a profit? Yes. Is it likely going to go much, much further? No. Look at that. Went up a little bit. Well, actually, you had a couple of changes of climate there, a little bit of, sideways movement, with a couple of dots that were thin, isn't it? But again, having traded at the end of this climate is not a very good idea. So this is one part of the answer of the trend is your friend until the bend at the end, but when is the bend going to happen, right? So, you never know. We cannot predict the future always. We can time the markets with a certain degree of precision, for sure, with the tools we have, but it's not like, you're always going to be right and you're always going to catch a turning point exactly. It's no way. That would be amazing, but we all know it's not like that in trading, isn't it? So, but at least now with AutoClimate, if your entries are likely going to be late to the party. If the climate has progressed for too long in that direction, entering now may not be smart, okay? Even though it could last longer, odds are against that, okay? So the idea is to catch those climates in earlier stages, like here. So if the climate does propagate, you caught it from the beginning. And if it doesn't propagate, well, then you get the loss and you lost, and that's it. But if it's gonna propagate, you're gonna be able to maximize your profit and reach a far target because you are entering the climate early instead of entering climate too late. Okay. Cool. Miral, I wish your video is not overlapping on what you are showing. Is it? Oh yes. You know what? You are absolutely right. I did not notice that. Thanks for that, Miral. So let me do this. I'm just gonna let me position this window in a slightly different position. So hopefully now you guys are gonna be able to see it. I believe so. Yes, now you see it. Thanks for that, my friend. A very good observation there. Anyway, so that's the first portion of the answer to when is the bend likely going to happen, right? So am I late to the party or not? That's another way to think about it. Now, the other way on how to look at this, okay, is look at the max distance. Okay, and then the reality is that you're going to look at both max distance and count. Okay, there would have been a UFO there. Got you, Joe. I love the fact that your thinking is it's all about the UFOs and you are totally focused there. I love that. Um, so going back to what I was saying here. Okay, so we're going to talk about max distance now, right? And again, the way you read max distance is the same. You have the blue values, which are statistical measurements that are only useful in up climates. You have the red values, okay, which are statistical measurements that are only useful during down climates, okay, and then you have whatever is happening now, which current, the color of current will be lining up with the last dot on the chart. Okay, so take a look at what's happening at this moment in time. Okay, so at this moment in time, we have a current value of 0.83, okay, which you can see is right here, 0.83, and therefore this value has to do with the vertical line that we have above the dot, sometimes below the dot, most of the times above the dot, which is something I have not explained to this point. So what is that vertical line representing? Okay, and how does it relate to max distance? Well, that vertical line represents the distance from the current price to the 9 EMA in ATR multiples. And that's why, if I go back to the properties of AutoClimate, we have an EMA value, which is the 9 EMA by default, an ATR value, which is 14 by default, and also a directional movement index, which is 14 by default as well. And then here we have the max distance, which again, I'll come back to this in a moment. So could you change that to anything else? Yes. Is it wrong to change it? No. Again, the philosophy of AutoClimate is to apply it to what we call common timeframes. If you have taken our courses, you know what I mean by that. So if you are using common timeframes, it's because you're trying to attract more people to buy after you buy, or more people to sell after you sell, which is what you need for the trends to continue. And therefore, you don't want to get too original with the parameters of AutoClimate, because if you basically you are the only one looking at those parameters, so then you're not going to attract too many people to buy after you buy or sell after you sell. So the idea is to use the most classical parameters, while you could backtest anything else, and I'm sure other parameters may work very well too. The idea is to use the most classical adjustments for indicators as possible. And when it comes to EMS, the most classical EMA that you find in trading platforms is 9. When it comes to ATR and DMI, the most classical adjustments you have in most trading platforms by default, it's 14 and 14. So that's why by default, AutoClimate comes with 9, 14, 14, right? So what happens if I plot the 9 EMA? So let's plot the, I just clicked envelope. Sorry for that. I didn't want an envelope. I want the moving average. Okay. So 9 exponential black line. Very good. So that's a 9 EMA. Okay. And what if I add an average true range, which is something we'll need to talk about another day? For now, I'm just going to put it in there, which is 14. So what that is telling you is that one ATR in a 5-minute time frame for Microsoft is 73 cents. The current price of the EMA is 323. The current price of Microsoft is 324 something. And therefore, the distance between these is whatever amount, which divided by the ATR value is 0.83. In other words, the distance of the current price to the EMA in ATR multiples is 0.83. So you are 0.83 ATRs away from the mean. That is another way to think about it. Okay, cool. So now, why is that interesting? Well, because notice that there are times where the climates have very, very large peaks with those vertical lines. And what does that mean? Well, on one hand, that shows a lot of strength in that direction. But if that move was to surpass a specific value, beyond strength, what that would mean is that price went too far too fast. And statistically speaking, when, even though it could be strong either up or down, when price moves too far too fast, again, statistically speaking, typically we are now entering a scenario of non-sustainability. And therefore, you may be, let's say you just started a climate, and even though you just started a climate, you have this huge, massive, massive, massive move in one candle or two only. And even though the climate is likely going to last for 10 candles, because the initial 2-3 candles move so far, well, entering now, it's just late already. Not because the climate is not likely to last longer, but because whatever amount of movement, whatever amount of price movement and distance was going to happen in a normal case in those climates has already been traveled. And therefore, again, in that scenario where, you're more likely to find lack of sustainability, entering a trade in that direction, it's probably low probability. Okay, so that's what we are calculating here. But because we are looking here at extreme conditions, so notice that instead of looking at like what we do with the count at 1 standard deviation, here we are looking at 2 standard deviations. Okay, and basically what this is telling you is that every time in the past when the vertical line, which calculates the distance from the current price to the mean in ATR multiples, right? Every time that line has reached 1.43 or more, typically sooner than later, this led to a change of climate, or if it didn't lead to a change of climate immediately, following that huge spike of price movement and extension. So typically the market didn't go way, much more further, and therefore taking a trade will not be worth it. Okay, in that direction, you should actually start thinking and expecting the market may reverse. Okay, I'm not saying go ahead and counter trade unless it's part of your plan, but I'm just saying that from a continuation of the climate, you are now entering that non-sustainability territory, at least from a statistical point of view. Okay, Miguel, Jose, any way to get max distance values in AutoClimate for TradingView? No, that is only in top, Miguel. On TradingView, you have the count, but you don't have the max distance. Okay, we may release a different version of AutoClimate for TradingView at some point in the future, but at the moment, we don't have it in the works. Okay, so maybe in the future. Right now, what I'm discussing today is for top. Cool. Okay, so for example, take a look. Okay, let's go back in time here. Okay, in this particular case, so what was the value? Okay, well, the value was 2.59. So the current value was 2.59. 2.37, it's the case, is the 2 standard deviation of the cases where after reaching 237, which of course 259 is more, so after reaching that value, which we just surpassed, now you would not expect that market to continue moving much further. Okay, could it continue moving further? Yes, but you would expect first some sort of a retracement and maybe then progress, but you would not expect it really to continue from here, because again we are in that non-sustainable territory. Okay, so out of curiosity, let's see what happened. It did continue a bit more, just a bit more. Okay, and from there, major change of direction again. Why? Probably major profit taking. Why? Because the move was so exaggerated that, again, when you are entering those too far too fast scenarios, non-sustainable also means a lot of profit taking and therefore potentially moves in the opposite direction. So now it's not always like that. Sometimes you will see that's why it's 2 standard deviation of the cases, right, which is around 95% of the cases. So again, you still have 5% of the cases where the market could remain crazy. Remember, there is a saying in Wall Street that says that the market could remain irrational longer than you could remain solvent. So in other words, don't fight it. Okay, I'm not suggesting here go ahead and counter trade again, unless it's part of your trading plan and you have other tools on how to do that. Climate is designed, if you use climate by itself, climate is designed to assess the climate in the market so you can trade in the direction of the climate when it's safe to trade in that climate, right? So AutoClimate is not a tool designed to counter trade unless you combine it with other things. to add odds, because in general, trading in the direction of the climate has more odds than trading against the climate. Okay, so just keep that in mind. Okay. Now, in this case, for example, now you can see how the climate, really, really cooled down. You are now dealing with 0.52. Okay, so 0.52 is way less than 237. From a count point of view, at this stage, we are talking about 8 out of 8. So, I mean, from a sustainability point of view, 0.52, it's okay. That market may continue. But from a count point of view, you are now reaching the statistical end of the climate in a one standard deviation of the cases. So could it continue longer? Could be. In this case, 10 candles, 11 candles, 12. So it went all the way to 14. And now it seems that we have a change of climate. Okay. So 14, 15 candles, that was the duration of this climate. It was actually a pretty extended climate. But even though it was pretty extended, thanks to max distance, you will know that trading short here was not a good idea. We're trading short somewhere here. That was candle 1, 2, 3, 4, 5, something like that, 6, something like that. So now you could still catch a few more candles on the way down. And of course, you don't need to be a perfectionist and get out down here. Ideally, we catch that, but most of the times, we catch partial moves because it's easier to catch partial moves and profit from partial moves than catching the move from beginning to the end every single time. That's I guess it's just a bit too difficult, isn't it? So now you can see how we combine those things, isn't it? So we combine those things in a way where first you look at what the climate is. Second, you look at the count. So if the climate is confirmed and is suggesting that trading in a specific direction carries odds in my favor, that's great. But I don't want to do it unless the count is in my favor, because maybe the climate is very strong but has been running for too long, and therefore the likelihood of the climate to continue is less. And while the climate is very healthy, I'm late to the party. I'm entering late in the count. Another possibility is that you are early in the count, but the MAC distance, it's basically telling you, wow, the market moved too far too fast. So you better stay away or wait for some sort of a retracement and plan on re-entering, the next candle, the candle after, whatever time frame you use. In this case, I'm using 5 minutes. It could be daily, it could be weekly, it could be 60 minutes. It doesn't matter. It depends on your trading plan and the time frames that you use. Okay. But anyway, that's the thinking. Okay. And so let me know, guys, if all of this is well understood. Ahmed, good to see you, my friend. The speed bump caught the bottom, by the way. Yeah, not surprised about that, Joe. Not surprised about that. So we do have tools to do counter trading, isn't it? But again, I'm focusing on AutoClimate at this moment in time. Good. Well, something since we have it in front of us, I'll make one extra note, because now you may be like, okay, so the market is moving, and now you are back in an up climate, but careful, it's a thin dot, right? So that means that the climate will be non-confirmed, okay, and getting long, would carry limited probabilities, okay? And why is that? Because again, think about impulse versus correction, going back to the prior conversation that we had. So it's a very strong impulsive move to the downside, but that's also a very strong impulsive move to the upside. So that's not a correction, but at the same time, you cannot call it an impulse to the upside, given the fact that you had such strong impulses to the downside. So it's probably leading to a sideways market unless something else changes. And here is a change. Now, after a correction, now you are impulsing again. So that's the characteristic of an uptrend. So now climate is giving you permission, and this is 3 out of 5. So you can still get in for a couple of candles. Okay, the current value is 111. Okay, 111 is the current value. You are approaching trouble too far, too fast if it's 148, but it's not 148, it's 111. So trading to the long side would be, from a statistical point of view, would not be a crazy thing to do. And of course, and it, is not always going to work. But in this case, hopefully you find a good trade and you were able to profit from that continuation of the move that took place. Okay. Now, what's happening now? Well, things are now more challenging. at this moment in time, 8 candles out of 5, so that's already showing you exhaustion. And 144, right, versus 148, so we are not reaching too far too fast yet, but getting close to it. So I would expect that to start, thinking of, as you can see, change of climate. Okay, so you can see how the whole story behind AutoClimate is to help you to answer question 1, going back to the beginning of this explanation, which is a long one, which the question 1 is it time to trade, yes or no, and if so, long or short, right? That's what AutoClimate is helping you to answer. And this could be combined with other techniques and, and the UFOs and Fibonacci's and whatever you want. But before you start doing all of this, looking at AutoClimate, in my mind, is a very good idea, because at least you know if it's time to trade or not. And if so, you know what's the likely direction where you may profit more easily than, instead of putting yourself in the wrong side of the market and now the market is against you. So basically that's AutoClimate, and that's how we have inserted it in the platform. That's how we read it. And from an adjustment point of view, I can see here a comment from Christian. So 3 criteria to decide an entry: confirm dot, count, and where are you versus MAC distance, right? Yes, correct, Christian. Yes, correct. You're absolutely right. My top is very powerful when we combine AutoClimate, speed bump, Elliott wave, and UFO. Yes, I'm with you, Ahmed. I'm with you. Right now, I'm just looking at one tool at a time, which is AutoClimate. But not sure what just happened here. My monitor just came back. But when you combine those various tools together, so then it's even more powerful. But again, AutoClimate, very good starting point. Also to even being pragmatic, just to save you time. Why would you look at Elliott wave or speed bumps or UFOs and do drawings or make notes in a piece of paper or whatever, a spreadsheet? If the climate, in the end, the climate is against you. So check the climate. And if the climate doesn't let you trade, doesn't allow you to trade, if you use it as a permission tool, end of the story. And if the climate gives you green light for you to go ahead and trade, then continue planning your trade. That's the idea. Got it, everyone. Perfect. Okay, so now a couple more things about the climate. When you right click here, you can go to properties. Another way to get to the properties, and this is the first time I'm teaching this, because it's the first time that we are now looking at studies that are subgraph type of studies. AutoClimate is the first one in the list, isn't it? So you can right click anywhere and go to properties to get to the properties of the indicator. But little trick here, you can double click on the title. You see, if I put my mouse in there, it's highlighted in blue in my case. So if you double click there, it brings that window with the parameters as well. Okay, so EMA 9, ATR 14, and DMI 14. I talked about this before, so I guess it's okay for me to just go to the next one. Then we have the summary for minimum segment count and display max distance, which this is a feature only in top. This is not in TradeStation. This is not in TradingView. This is not in MetaTrader. And again, this has to do with, for statistical analysis purposes, ignoring cases where something like that happened, where there is only one dot. Okay, well, that truly happened, but really from a statistical point of view, it doesn't help too much. Like, for example, to calculate what is my max distance out of one single candle that went on the other side of the EMA, that does nothing. Okay, so by default, we are ignoring any climate which is less than 3 candles. We ignore that for statistical analysis purposes. That's what that number does. Okay, if some of you want to add 5 or whatever, it's fine. If you want to do 2, it's fine. If you want to remove it, it's fine too. But at the same time, I think it's a good balance to have a value there like 3, because really, if a climate is going to last for less than 3 candles, I would say that's not even a climate. Okay, so what kind of climate is that? It's just like if you think of the meaning of climate, if I was to be a weatherman instead of a trader, right? How would you feel if I tell you the summer is going to last, 1 day, right? 1 month, right? So you would probably say, well, that's not the summer. So kind of the same thing, right? So I'm drawing a line in the sand here of the minimum amount of candles to be used for statistical measurements, okay, which I guess makes sense. And finally, display max distance, okay? So if some of you are using top, coming from TradeStation, for example, or as Miguel said, from TradingView, and let's say you've been trading for a while with AutoClimate and it's working well for you, and you are not using max distance, so you can just uncheck it, and then max distance goes away, and that's it. I mean, to me, it's a good thing to use, but at the same time, it's not as critical as the count. And many of you, I mean, literally thousands of you are using AutoClimate out there, and you are not using max distance, and it's helping you greatly. So some of you may consider unchecking, and there is nothing wrong with this. Like everything else in top, once you have adjusted this to your liking, you can save it as a default. So then every time you add AutoClimate, it would be like that. And if you ever regret that you, let's say you uncheck max distance, save as a default, and then you regret, so you can always go back to factory settings, and then it will make your AutoClimate to be like it comes by default, which is the way I have it here in the bottom part with 9, 14, 14, with the max distance, the count, and those minimum 3 candles for statistical measurement purposes. Cool. So, my friends, this is a 50-minute conversation about AutoClimate, which I believe was needed, even though I also believe that many other things I explained were probably known by many of you. But I guess that it's important to sometimes to have a little bit of a summary and a little bit of a refresher of things that are important. Okay, so please let me know before we move to the next item. Please let me know how is it going. Any question, let me know. And if all is good, just type a quick OK. In the meantime, I'll take a sip. So I'm ready to continue with a little bit more of speaking. Very good. Thank you, Miguel. This is great. Good to see you, Miguel. It's been a while. I haven't seen you around. I'm very happy to see you, my friend. All good. Thank you, Mark. All good. Nice refresher. Thank you. Thank you so much, guys. Cool. Okay, so I'm gonna get rid of AutoClimate, which you do it by right-click, remove. Okay, or you can just do it anywhere in the chart. You can right-click, remove study, or remove all studies, and then everything goes away. Okay, cool. Okay, so next one in line, which is the next one and the last one we're gonna discuss today, is accumulation distribution. And to be honest, I cannot talk about this one without mentioning unbalanced volume, because what those two indicators do, it's kind of the same, even though the calculations are different, but it's kind of the same. So let's go ahead and add accumulation distribution. Let's go ahead and add unbalanced volume. And let's talk about the differences. I'm going to apply this to a daily time frame. Okay, I mean, that's one thing that would kind of suggest, like I guess most of the technical analysis books would suggest that when you use an indicator of this sort, probably a larger time frame is going to give you better results than a lower time frame. This applied to a 5-minute time frame. I would go as far as saying that it has very limited meaning. Okay, and you will understand in a moment when I talk more about what is this doing. Because what these two tools are doing, basically they are looking at price movement, and they are multiplying price movement to volume data. Okay, so it's price times volume. It's not exactly like that. I'm going to rectify this in a moment, but bear with me for now. So it's price times volume, and this is added to the prior candle as well, meaning that it's kind of like the difference between price between the prior candle and the current candle, and this times the volume. And it's not exactly like that either, but I'm going to add more precision in just a moment. But basically with what I said, you are probably guessing for what a tool of this sort could be useful. And the one thing that could be useful of this type of tool is basically to understand how healthy or unhealthy a trend condition is. You could actually combine this with AutoClimate. You could, and defining healthy by not only price movement happening in a specific direction, but also volume coming in, increasing volume coming in that direction, or decreasing volume coming in that direction. Okay, that's what this is doing. Now you can see that while both the accumulation distribution and the unbalanced volume studies are both looking at price multiplying times volume in a specific way, which I need to explain, notice how the readings are different. For example, in here, you can see how the price of Microsoft went down, up, didn't reach that high, and then went down, which is kind of what you see here. It went that high, then went down, and then when you look at this peak, that peak is lower than the prior peak. Okay, where in the case of accumulation distribution, so let's call it a peak, and here, it's basically going flat. It's not really coming down like this one here coming down very clearly, just like the price of Microsoft also going down very clearly. Okay, and why is that? Well, this is because of the difference on how accumulation distribution and OBV is calculated. So basically, OBV is just looking at the current candle and the prior candle, looking at the closing price. That's it. So if the closing price today is higher than yesterday, then it multiplies volume in a positive fashion. If the current price today is lesser than the prior closing price, that means the market has been falling. So then the way volume is calculated is in a negative fashion. And that's why you can see OBV tracking the price movement of the stock more closely, because basically it's only looking at the closing price times volume. But again, it's basically tracking the chart because it's only looking at the closing price. Of course, there are cases where you may have divergences where the market is falling, but OBV is rallying. And how would that be possible? Well, it's because maybe the quantity of volume coming in is huge. So the market it's falling, but the days where you got an up day, so the quantity of volume in those up days is huge, and you may see that OBV start going higher and create a little bit of a divergence. So that could be a way to kind of start predicting a change of trend in a larger time frame, something like that. But in most of the cases, you will tend to see OBV kind of match the price patterns that you get to see on the candlesticks themselves, because again, it's simply looking at the closing price. Whereas accumulation distribution follows the same philosophy, but the calculation is quite different, because basically what the calculation does, and I don't remember the formula by heart, okay, but basically you're looking at the high minus the close. Okay, so in other words, you're looking at from, for example, that candle here, the high minus the close, it's just like the size of that tiny wick. That's what would that be. So we have a very small number, right? And then you are also looking at the difference between the close minus the low. Okay, so the close minus the low in this case, from here all the way to here, that's a huge distance, right? The close minus the low, huge distance. So in other words, you are looking at this compared to this, okay? And then you're looking at this compared to this, and think about it. If that number is very small, that's very bullish. It means the close is closing close to the high. If that number is very big, that means that's very bullish, because it means the close is closing very far from the low, and vice versa. And then what you do is that you subtract them from each other, and then you apply a ratio compared to the whole range of the candle, which is the distance from the high and the low. So in other words, when looking at the whole range of the candle, you are looking at the upper part, how bullish is, the bottom part, how bullish is. You subtract them from each other, and then you apply that to the ratio, which is the whole range of the candle. So basically what you end up happening, what you end up doing, and you do that for every candle, and when you compare that from one candle to another, you get to have a sense of bullishness versus bearishness, which goes beyond simply looking at what was the close yesterday and what's the close today. So you are looking at what's happening during the life of the candle when it comes to what about during the day. Maybe the close today is below yesterday, but the price action intraday, was it more bullish or more bearish? So you are looking into that, and depending on that, then you multiply times the volume, and that's why you get, somehow, a different type of reading. Okay, so the way, to me, this is useful, even though I personally don't use it because it's a bit subjective, because you don't have like specific readings, and every stock in the market got different quantity of volume, etc. So you cannot just draw a line in the sand. But again, if some of you are into looking at divergences, convergences in oscillators and things like that, we'll talk more about that in future sessions. But if some of you are into that, then one thing that could be useful to you is to look into when those things get flattened. So when it gets flattened, okay, it means that whatever is happening, okay, doesn't really lead to anything. And so when you see some duration of flattening on the accumulation distribution, okay, starting from here, you could predict that, it's not going to continue going higher the way it was behaving. It's more likely going to remain sideways for a while, or even start dropping. Okay, and the reason why is because that accumulation distribution is looking at the bullishness and the bearishness that is happening within every candle times the volume, and if that flattens, so that means that there is not much decision on what's happening. Notice that when you have a clearly trending market, okay, so that is also going higher. But when it gets flattened, that's when basically it's telling you caution, because you may have a reversal, or maybe it's time to take profits. That would be something interesting. With unbalanced volume, you could do the same, but notice how you have many more highs and lows, peaks and troughs, and it's more difficult to call this flatten, where with the accumulation distribution you will see, in general, I'm just going to change to Facebook, for example. So notice how unbalanced volume is doing many other things, where this, for example, when it flattens, it's clearer. Okay, it's clearer. Okay, or here, it's clearer. Where unbalanced volume is a bit more erratic, if you wish, because it's only looking at the closing price. Okay. So again, just one more tool for you to guys to experience. My trading style, so I'm not a super fan of indicators of this sort, in the sense that often there is subjectivity to look into them, and in this case, the subjectivity comes because when you look at those numbers, that number is huge. Why? Is the S&P huge volume, huge. But if you apply this to, let's say, McDonald's, which is also very liquid, well, the number now is a few digits less. So yeah, so it's a very, very big difference. Okay, but again, maybe that could be one of those tools for when you get into a trade and the stock starts behaving very, very quiet, and it looks like it's not moving, and your target is still far and it's not moving. Maybe you can look into it, and if you see that not only the stock is not moving, but your accumulation distribution is either flattening or reversing on you, maybe you want to exit and abandon the trade, because the likelihood of the trade to continue is less. Okay. Again, there is some subjectivity into it, so if you're going to use it, I do recommend, for everything really, to backtest it, and indeed to have a set of rules on exactly how to use it, so you don't need to be subject to impressions, or what, today I feel like accumulation distribution is telling me this, and I feel like it's subjective by definition. Okay, cool, my friends. So we're gonna call it the day here. Let me see last questions from you. Thank you, Miral, Ahmed. So when it is flattened, we can think about Iron Condor. I would not suggest that, Ahmed, because flatten could be the beginning of a reversal, right? So if less vol, it's kind of like the concept of price goes away from the mean, comes back to the mean, away from the mean, come back to the mean, or or if you apply a Bollinger Band, for example. Let me remove all studies. So, and you will see why I'm mentioning a Bollinger Band here. Just give me 1 second. Okay, here we go. So if you look at the Bollinger Band, so there are many cases where, the band contracts and then expands. And what's the difference between the contraction to the expansion? Look at the move, right? The band contracts, right? And what happens next? Move. The band contracts, and in this case, boring. Okay, the band contracts, and here boring, right? But then the band contracts, and here you have move. So many other things is the concept of kind of like the market squeezing and then expanding, right? So like a spring, if you wish. So the accumulation distribution could be a little bit of the same, and in that sense, I would not use it as a tool to identify potential non-directional opportunities. I would more identify it as a tool to either expect a change of direction or take profits or something like that. But again, that's just my style, and any other application I would suggest to go ahead and backtest it, so you guys can put rules around it and know how to use it. They are indeed very smart tools, but again, there are many tools out there in the world that are very smart but also very subjective, and that as a trader doesn't help you. Where if the tool is very smart but also is objective, so then as a trader now you can execute, right? Because we need rules. That's what we need, right? We need rules for traders, right? Anyway, my friends, it's always my pleasure to meet with you always, and especially on the Sundays. Extra appreciated that you guys are making time. We'll see you soon. We'll see you on Wednesday next week, right around the corner. Santa Claus is coming, guys. So I'll be saying Merry Christmas to everyone next week. And for the ones of you that cannot attend, maybe you have plans. So I'll say Merry Christmas now too. Enjoy this very special season for many. And see you next week, my friends. Take care. Bye bye.